What's up, YouTube? It's Joe Catchpolia sitting on the couch, making some money investing in fractional real estate online, as usual. Today I'm going to cover the Freeman, which is Mogul's most recent listing. It's a Padxplit in Houston. It's not quite sold out yet. I am pretty late on this one. There's only, I don't know, $15,000 or $20,000 of it left. I'm sure we'll see when we click on the page. It's another Houston property that's selling out very quickly. And another one that, I'm not really sure why these ones are doing so well. It might just be people are looking for access to Houston, that market, because it's a market, I really like. It is growing, but it's hard for me to see how these are the most attractive ones on the platform. And for me, I've passed on a lot of the Houston ones. I do own a few, mostly, their STRs that they were listing, late last year and early this year. But anyway, let's jump into the property itself. Okay, it is the Freeman 10 bedroom, 4 bathroom, Padxplit. Numbers pretty much in line what we've come to expect from Mogul. They think their average yield is going to be about 15%, levered IRR about 14%. Let's see, what are they? These are they said they have several years of actuals, and their underwriting is below the actuals, and at a 9.3% year one yield. I think that's fantastic. That's something that they have just continually been able to put out these deals that have these very strong year one yields. Somebody asked me in the Discord today, and I looked back to see, on one of the comments actually in YouTube, and I looked back to see, what my annualized yield is just on my Padxplit properties for Mogul, and I'm right over 11%. So they have been the better yielders of the two groups that my short-term rentals are underperforming so far. Once we have a full year of performance, we'll see how that is. But I sort of expect that, because I think the short-term rentals will appreciate better just because of the properties themselves. And the Padxplits, I do just expect to have better yield. So we'll see if that continues. Trying to see if there's anything in the email that I wanted to share, but I think no. So, looking at the property, it is, it has a garage that's been converted to livable space. I looked, this sold actually in 2021, and that's to what I believe is the current owner now. It was in really rough shape then. It sold for like $147,000, but it was, in my mind, a full rehab. And so it looks like this was maybe their plan from the start for this property, just because of the, the way it was done. I think that if not, it was, they say they have several years, so it had to have been relatively quickly thereafter. I don't really know what's up with this flooring. It looks really strange to me. But maybe, I don't know. Why isn't that? I thought I could actually open this. Yeah. Open image in a new tab. Don't forget you can do that. Oh, but then that's why I don't do it all the time, because then it goes and downloads it, but then it'll open it. Let's see. That's annoying. Sorry about that. But yeah, see, this flooring is it's a little bit odd looking to me, but there's not any, I don't know. Maybe it's just a bad picture of it. But in the other rooms, I couldn't really see it very, very much better. Stuff like this drives me crazy, right? Like when you have the refrigerator spot and it's not full, right? There's like that little space in there. But that's just a silly complaint. I think that's going to have close to zero impact on the performance of the property. I just sometimes nitpick stuff. But yeah, so let's run through the easy stuff first. Check the FEMA flood map. Oh, there was a really good discussion in the Discord on this one too. Before I forget, please like and subscribe. In the description of this video, I have links to all the places where I'm currently investing in fractional real estate online. Please feel free to use any of those links. Some of them say they give you money, and they actually do. Some of them say they give you money, and that's yet to be seen. So do your own due diligence on all that and all the properties that you see me talk about. Don't just buy stuff because I do. We have different risk profiles, different goals and all that stuff. So make sure you're doing your own due diligence on all of those things. Also, in the description to this video, I have a link to a Discord that I have set up. And that's what I was just about to say. We've had a really lively discussion on the Mogul thread whenever new properties come out. Ike was nice enough to do a lot of my work for me. I'm using his links for the flood map, the spot crime. Like he's searching for it himself and putting it out there for to share with everybody. I really appreciate when people are doing that. Brad and Mike also both made some comments about different things, shared some info, and it's always that's what I'm here for, right? I'm really would like us as a community to dig into these properties, to share ideas, to spot things that I don't always have all the time in the world to dig into every one of these properties. It's great that there's other people doing it too. We're sharing that info, so please do join the Discord. And get the most out of it. And the way we do that is by sharing info, asking questions, and also too, like when we all can have some things that are complaints, we can take them to platforms together as a group. And we've had some success doing that with some of the platforms, and so let's keep that up. All right. Anyway, FEMA flood map looked good to me. I thought this was kind of interesting that this whole side, we have the AE zone. This is, I believe, shaded X, and then we're just in a plain X, which is what I always want to be in. So let's close that. The spot crime map, Houston, I've just really come to expect not the greatest crime map. This one's not too bad. I think it's because we're further out of the city center. This is more than 2 weeks of crimes, and it's pretty spread out, right? There are quite a few assaults right in this general area. And thefts. So it's not great, but it isn't. It's not as bad as some of the ones that we've seen, right? I mean, but obviously, in general, I think we've seen worse crime maps near the Padxplits than near the short-term rentals, and I think that's somewhat to be expected. Whether or not this is too much for your risk preference is, something you'll have to decide, right? And I didn't pull up the Neighborhood Scout crime heat map. That's something else that you can do. If anybody else has different places that they look for crime info, I'm always curious to, come up with new due diligence sources. All right, there's that. And then this is the current listing for this property. It says they have 2 rooms available. I don't remember. I think they actually asked that question because they talked about this property during the webinar, and I think that they were expecting this to be full at closing, although maybe you'll have to go back and watch that because I'm not 100% sure that's what I remember. But they did say, the averages that they underwrite to, they're not underwriting it to be full all year. They're looking at the average, the average vacancy or average occupancy over the last year, and that's what they're using for their underwriting. So 2 rooms out of 10 doesn't worry me. We've seen sometimes where there's been a lot more than that, and I'd be a little bit more worried. Parking, there's 2 open spots remaining, and this blows my mind because this was hard for me to, there's very little parking, right? So this is the property. And you can say, well, yeah, look, you could do 6 cars if you did it tandem, but we don't do tandem parking in Padxplit, right? We just do, you're not going to have people that are willing to park behind other people because, you're not going to go, they're not related parties, right? So they're not going to go wake each other up and say, hey, I need to get out or whatever it is. And then there's just not very much street parking at all. So I find this really surprising. I kind of wonder if there is more parking somewhere like than what we see in these pictures here and in the listing. Like if they, here it looks the same there, right? So it looks like you just have a couple of parking spots. So I'm not sure. I also didn't see a very close transit map, and sometimes they just hide on me, and and that's possible. It's possible that I didn't see that, but it seemed like the closest one might be pretty far away. But again, sometimes they don't show up as easy, so maybe I'm just missing it. I don't know. I was kind of surprised because usually that's something that we see them being pretty close to. That's okay, if we don't have a lot of parking, it's okay if we're going to take transit, but then if we don't have a transit option either, I have just no idea what these people are doing to where we can have 2 open parking spaces. Like I'm curious what's going on there. It's a question that I would ask if I were going to invest in this one. It is one I'm planning to pass on anyway. And if I had jumped on this one earlier, I probably would have, or if I had noticed that earlier, I think I would have asked the question on the webinar, but they dropped it on the webinar. They offered it for the first time, and so I didn't do any research ahead of time on it. Sometimes we've gotten those links a little bit early, and I've been able to do that, but not always. I'm saying that, and now I'm actually wondering, is that true, or did we actually get this one? Yeah, I think that's true. I think this is the webinar one. Hopefully I'm not just getting that confused. Okay, let's get back into, but I mentioned, this is one I'm not necessarily planning to invest in. One of the things that I've thought a lot about since their discussion about the secondary market opening next year is that for a lot of these, I think we can just wait, right? Like we don't, even if you miss this now, I think there's a decent chance we'll be able to pick up pieces of these. Maybe not next year, maybe people aren't going to be willing to sell. But if some of the other marketplaces are any indication, there will be people that need to cash out of some of these deals, at some point in time, in the near future, right? People that have locked up capital that maybe they shouldn't have. We saw that on Arrive secondaries. There's people selling out on Lofty. You see people selling left and right, even on ARC 7. So I think there'll be some opportunities, and that's why even though there's not a lot of this one left, there's only $14,000 remaining. I still figured I'd do a video because maybe this time next year I want to go back and look at and see, if it does open up on the secondary market and someone's trying to sell some of this, it'd be interesting to see, okay, can I pick some up and what's the price and how's it been performing and what did I think about it, at this point in time. So what's my big hesitation with this one though? It is the price of the property, right? And we've run into this more in Houston than in any of the other markets. I'm not sure why that is. I don't know if it's because they also tend to have the biggest pad splits here. We have a lot of these 10-bedroom ones. I think we're seeing this because of the, Houston's lack of zoning, that they're able to do this and not really worry too much about it. I don't really know if that's the reason, but we've seen more 10-bedroom units there than anywhere else. But at the same time, we've just seen a lot where the comps they're using to get to the valuation just don't really make very much sense to me. So before I jump into the actual comps, look at what some of the third-party websites are showing. Okay, Redfin thinks it's $222,000. Oh, did I already say how much we're paying for this? I think I just kind of glossed over that. $325,000. Redfin thinks $222,000. Okay, well that's not great. Well, maybe let's check Zillow. Okay, they say $207,000. Yikes, right? But I mean, both of these think it's a 3-bedroom, 2-bath, 2,000 square feet. So they're not giving us credit for the square footage in the garage on either of these. Realtor thinks it's $201,000. All of these are all values as if it's a single family home, 3-2, not a converted garage. We have 10 bedrooms, 4 bathrooms. The garage square footage brings us up to what, gives us another 280 square feet. I think there's room to go up from these numbers, and then plus we're getting an operating business and we're getting all the furniture. But 325 is tough for me to understand how we're getting that number. And so then I actually looked each one of these up on the MLS because I do have access to that. And one, I wanted to verify the prices because some of the other listings, they didn't even have correct sale prices here. But these all looked good to me, so I was glad to see that. They all looked like what I saw. But yeah, why don't I like these comps? Well, this is our property here. And then you can see as I highlight each address, the little red dot shows up as where the actual next property is. I mean, they're really going all over the place to pick up comps for this. And I can't figure out why. I mean, the only reason I would ever do this is if I just really had to cherry pick comps to justify a value that didn't make sense in my neighborhood. And I would never do that. I mean, that's not something that I'm doing when I'm trying to list a property. Um, so I'm not really sure what's happening here. And we've seen this quite a few times where they're just going really all over the place. This, more in Houston than anywhere else that I've seen. And I don't really, I'd like to understand what's happening here. If these are just, when I looked at those properties, it didn't look like any of them were pad splits, or at least they weren't noticeably so. Hold on. Yeah, I actually just went back and checked real quick. None of them, as far as I could tell, looked like they were pad splits when they sold. And when we even look at, okay, 4-2, 4-3, 4-2, 4-2, 10-4. So, I understand that maybe these valuations aren't using truly comparable properties, but we're also just not going out and picking out other properties that I think, these are okay, maybe they're more in line with what we're paying, but I don't understand how these are the properties that become our comp set. I'd love it if we could get a good explanation on that. Whenever I ask, they always just say, this is what our agent's giving us for our comparative market analysis, and we get appraisals, and they do get appraisals, and we do have appraisal contingencies. But now we've seen a couple times that something will come in low, and they will adjust. Sometimes they might just adjust the financing to make up for it, and so. Which I talked about this in my last video. I am okay with that. They're only doing it to the extent that they're not hurting the deal, as long as they can, keep the IRR the same. They're not like having us vote to see, okay, do we need to back out? So I'm okay with that, but it makes me want to be even more careful about, okay, the basis, right? Because you've heard me say it a bunch of times. Yield is temporary. Basis is forever. I love that they're able to get these great yields, but I do worry about if I'm overpaying too much. And then, because that, the basis is, a low basis is what gives me a margin of safety, which I always want, right? And so if for some reason we can't do the pad split model anymore, for whatever reason it is, I don't want to be underwater on this property as if it's a single family home. And maybe this gets to the point where you just have to decide, do I believe in the pad split model or not? Do I think the next buyer is going to pay up for this in the way that we are, because it's an operating business and there's an existing yield? I think that's a reasonable assumption to make to a certain extent. But in a city like Houston, where we do have, we don't have the normal zoning ordinances that we're used to other places, it seems to me there's a very low barrier to entry, right? I could buy any home in the neighborhood, this home's neighborhood, spend not a ton of money to add some extra bedrooms and bathrooms, because they're not usually adding square feet. I mean, they did a bathroom conversion here, but they're not doing much else to add square footage most of the time. And so it worries me that it's going to easily erode your yield if this becomes so popular. It is just too easy to copy, right? So I'm just not sure that I want to pay a whole bunch more than I'd pay for a single family home in that same neighborhood. And we're just going so far out of this neighborhood. Like, I mean, it is like if I were listing a home for sale in my market, and this was the home, and I was picking homes like here or like this far away, I'd be nervous about the pricing, right? I mean, we're not like we didn't go one neighborhood over or something. We're going way out, I mean, I just don't understand how these are the ones that we're coming up with. So it would be nice to get a little bit of an explanation about that. I mean, obviously this has been selling out so fast. There are people buying these properties, and they're just not concerned about it. And so I understand why, Mogul probably doesn't feel the need to really break down, some of this stuff if there's a market for it. I think, at the end of the day, if you believe that the Padxplit model is going to continue, we could just operate this, get our 9% yield, and then hopefully it does keep growing, right? Like, because their average yield there, and I still hate this, right, that they do average yield here instead of year one. Year one yield, I think they predicted is 9.3, right? And it seemed like they have consistently, this is one of the things that's interesting. They've consistently been conservative in their yield estimates. Like I think that's been, I think that's the part of the thing that they're doing they're more consistent, but then they're just really aggressive with what they're willing to pay for properties. And I get it, because like you're buying this fantastic yield, but I do just worry about it from an actual value of this property, especially one like this that it doesn't have great parking. Like this is not a particularly good home to convert to Padxplit, right? I'd rather have a corner lot where you get to park on the side, or some, have a triangular lot where you have a lot of frontage and there's a lot more room for parking there. Or, there's all sorts of physical characteristics of the lot that could make it more appealing. There are, this home, I don't think there was anything special about converting this to 10 bedrooms and adding some bathrooms. And then it didn't seem particularly close to a transit stop that I could find, and maybe I just missed that. So, the things that would make me say, oh yeah, that property is just great for Padxplit, I don't necessarily see those here, right? This was just like, okay, there was a cheap property a developer bought, turned it into this, but then we're not getting that benefit, right? We're not buying it cheaply. We're paying really what seems to be top dollar or more than top dollar if it were a single family home. I think the argument on the other side of that is, well, and a lot of people argue this for short-term rentals too, and we've seen it a little, but not to a great extent, to where the next investor is willing to pay up just like we were because they're buying yield. And as long as, if that continues, then I think we're perfectly fine. But if not, I get pretty worried about the valuation on this one. Despite the fact that we do have a financing contingency. Like I think that, or does this have the actual appraisal contingency or just a financing contingency? Let's take a look. I know I looked at this the other day and then I forgot to leave it up. I've been working on this one for a few days because I'm way behind, but let's see where we ended up on this. Third-party financing addendum. Oh, that's right. I forgot about this. This is important. This is a partial waiver. So we're saying as long as it appraises for $315, we're going to go through with the purchase, right? And so, that's even worse for us, right? So we're already agreeing to, if this appraises low, we'll come up with an extra 10,000. I think, and I talked about this in one of the other videos, I think this is a fair way to handle getting all the furnishings for free, right? Because you're buying the home, that you're financing the home. So, okay, maybe if the appraisal comes in low, all right, let me give them some extra cash for all that other stuff. I think that's a fair way to look at that. We're not also, because we're giving them zero money for all the personal property. So I think that's fair. But at the same time, you normally only have a seller ask you for a waiver like this if they're already worried about the appraisal, right? And so that's what I think we're looking at here. Oh yeah, that makes it, I'm even less excited about that. So I'm going to pass on this one. Doesn't necessarily mean that's the right move for you, right? If you really believe in the Padxplit model, you think it's going to keep going, and you think in the future other investors are going to be willing to pay more than they are for the home next to it, because this one is now set up perfectly as a Padxplit, right? Like if you think about it, if Realtor thinks you could buy a 3-2 home in this market for 200, or say 220, which was Redfin, right, 222, what's it going to cost me to get this to an up and running Padxplit? Well, I'm fairly certain that I could do all the conversion for less than 50,000, right? And then maybe spend another 10K on furniture, fixtures, equipment, whatever. So, okay, 60. So now I'm at like 280, 282. And then, right. So, I mean, I'm still 45,000, $43,000 shy, and then it's going to take me some time to fill it up. But Padxplit, they say, hey, we can fill up your units we can fill you up 80% in the first month is one of the things that they'll tell you if you call them and talk to them in most markets, right? So, and then you do pay that initial fee for all those move-ins. I just don't see how we get there, right? Like, it seems like we'd be much better off buying a nearby home and doing it. Like, if you do that math and you get pretty close, then I'm fine with it. And so in some of the other markets for Mogul's properties, I have paid, I've bought some of them that I think that they're maybe a little bit overpaying if you just were looking at the house, but because of all these other things I just talked about, it makes sense. This just seems too far off for me, and I'd really just like to see them give us a good comp set. Whenever they do this, I don't really understand. I don't understand how we're getting those. And it seems like, their answer is, well, that's what our agent's giving us. But I feel like there's just got to be a better answer than that. I mean, they're very smart guys. There's very little that I complain about what they're doing. And it is, whenever I've passed on properties, it's from a valuation perspective. But I mean, like, look at all these homes. There's no way that you don't have any homes sold closer than these homes that they've picked out. And, maybe even like if you needed, okay, well, I really want ones that are fully renovated. Like, I just don't believe you have to go this far. I don't know. That's, I'd love to find out an answer. If anybody's actually asked them about that, I'd be really curious to hear what they had to say. Other than that, if you're just thinking about, okay, well, what's the downside? Like, if you continue the yield, right? If there's no problem, and then you can't sell it for a profit and set 5 to 7 years. Well, okay, we'll just hold it longer, right? Like, I don't think they're going to sell these off at a loss sometime in the future, or, at no profit, just because they said it's a 5 to 7 year hold, right? I think as long as, so my concern is if we can't continue to operate it as profitably as we are now, and then we also can't sell it, anywhere near what we paid for. Like, that's where I'm looking at a downside risk, not necessarily like, okay, maybe we end up holding it a lot longer before there's enough of a movement to sell it for a real profit. But if you look at it, we're really expecting the vast majority of our return to come from the yield anyway. So, whether or not that's, you see that as being a huge risk or not is something that you just have to decide for yourself. For me, like I said, I'm passing on this one. I already have a couple of their Houston properties. I have several of their Padxplits. And, all of these platforms, I'm really just experimenting on. So when I'm real excited about one, I'll pick up a little bit more, I'll pick up more. But I'm not necessarily just where I need to put a ton of capital to work across these platforms at the moment. And so, despite not really liking this property, Mogul is still my favorite. I think if I'm looking for a property for a long-term hold, I think they still make a lot more sense than anywhere else that we're looking right now. On average, right? Not every single deal. I really like this one. To me, it just feels a lot like we're overpaying. Or we're buying something that maybe we're going to get yield from forever, and we're going to have a difficult time seeing any sort of profitable exit. For me, that's actually not a big deal, right? I'm not looking to exit. If I bought all these and just collected rents forever, and they spit out 9% plus yields forever, I'm perfectly fine with that. That's especially because as those yields grow. So I don't know. Sometimes I do start to think that I get a little bit too picky, and I am being more so than I was in the beginning, because I want to give it some time, the ones that I have on there, see how it goes. I'm really interested to see how the secondary market goes too. Maybe we're going to see some good deals pop up on that. I don't know how that's going to work. We've definitely seen that on Arrived. We've seen it on Lofty. We've seen it on Arc 7, where there are discounts. And so, as we approach that time period, I'm probably going to be more and more selective until I really know, like, okay, what's that look like? Because maybe there's going to be even better deals. Maybe not. I don't know. We'll see. But I'll still pick up ones that I'm excited about. If if they're like, I picked up the one in Virginia the other day. Okay, we're in a new market where there was a lot of stuff that I liked about that one. So I bought some. So we'll just see. Anyway, did you buy a piece of this already? Are you thinking about picking up a piece of what's left? If so, let me know in the comments, or feel free to jump in the Discord. Let me know there. Until next time, I'm going to just keep making mistakes so that you don't have to.